Welcome to SimpleChew. I'm your host, Hank. It's pretty much safe to say that most of us have heard from the news and the newspapers that inflation is going up and it's keep going up. It's possible in the near future we are going to have a recession here in the U.S. They are providing so much information all at once that it's hard for the average person to understand what's going on in the U.S. economy. It seems that they are just trying to scare people into listening to the latest news and not really providing any solutions on how to protect your money. Today, I'm going to go over 3 ways that you can protect your money when inflation is high. These are investments that I have done personally to protect my money in the past and will continue to do in the future. Investment number one, REITs, also known as real estate investment trust. So what is a real estate investment trust? It's a business that owns, manages, and finances income producing real estate. This is the simplest definition of REITs. What is cool about REITs is it offers a mutual-like investment opportunity that enables regular people rather than big banks gain access to valuable real estate. As we can see from the pros of owning these real estate investment trusts, we can see that we don't take a lot of the risks of owning these real estate investments. We benefit from the income that the real estate generates and then are paid to us as investors as dividends. We also benefit as the investors of shares appreciating in value, meaning if the stock of a real estate investment trust goes up, the higher our portfolio values go up with it, which is fantastic at the end of the day. Some of the cons, those of owning real estate investment trust, is because if it is like a stock and because it's connected to real estate, it can be slow to appreciate, so you need to be patient. Also, it has some risk of any stock in the exchange market. Most people go into real estate investment trusts not because they think that the stock is going to go up in value. They go into it for the high dividend returns. Another con that you need to be aware of is high management fees, because it's like a mutual fund. The fund manager is selling and buying new investment trusts, bringing the fees up, and someone needs to pay the fund manager at the end of the day. Just the way the world works. Investment number two, bonds. The type of bonds that we are going to be talking about are slightly different from corporate bonds. We are going to be buying U.S. bonds or government bonds. What makes these bonds special is they have inflation protection that is guaranteed by the government. The two different bonds that you can buy from the government are Treasury Inflation Protected Security, also known as TIPS. Some of the pros of these securities are they work like stocks exactly, where they are highly marketable, which are great because you can sell them, buy them just like stocks. Another benefit is if you have a high net worth or you have a lot of cash laying around, it's great because they don't have a purchase limit. You can buy as much as you want. Another pro of this security is the variable lifespan. You can buy them for 5, 10, or 30 years, depending on what you're more comfortable with. Makes it super easy for any average investor. One of the cons, though, is the fees of owning these. Also the taxes, because you need to pay all the taxes, interest that you are generating as you hold the asset. Lastly, I only recommend these when the inflation is up. They turn into bad investment when inflation is pretty much low, so don't buy them. Another type of bond you can buy is one of my favorites are the Series I savings bonds. Some of the pros of these types of bonds is they are simple to buy. They have lower minimum entry. You can buy them as low as $25 increments. One of the best benefits, they are inflation protected, but they are also tax deferred until they are redeemed, so which is fantastic. The cons of Series I bonds, they are not marketable, meaning you cannot sell them just to anybody in the stable market. Also, you have a limit on only buying $10,000 worth of bonds in a year, which is frustrating if you have a large amount of cash laying around or you're a high worth individual and you want to protect your cash even more. It can be frustrating. But you can buy in some other people's names, and if you have kids or if you're married and stuff like that. So you got some options you have to look for. Investment number three. I know a lot of people are not going to like this next investment, but it's one of the best investments you can do, especially when there is high inflation. This type of investment, it is something that you cannot purchase right away and you see the benefits right away. But as the old cliche goes, the best investment is in yourself and your own educations. I know how corny that sounds, and like any other corny ad that you have ever watched about education and the benefits of educating yourself, I want to show you the statistics that show what are the differences between somebody who has gone to college or has any type of higher education, and then we are going to compare them from people who don't. It's easy to see that the gap between someone who just have a high school diploma and somebody who is a doctor in their field. It's a huge gap in earnings. Some of the pros of educating yourself is job security. Without a doubt, if you're doing a job that only a few people can do because of barriers of education, and you have the knowledge to do it, you are providing value and making it harder you to be replaced. Even though everybody's replaceable, but you're just making it harder. As we can see from the graph, you can see the higher the education, the higher the income. People who have education usually are employed or are employees, and they have benefits, so they have health insurance, they have 401ks, which helps when they get older. Overall, having a higher education has the highest return on your investment. I know what you guys are thinking about right now. I know you guys probably saying, what about the debt, the student debt? What about people who earn stupid degrees? And most important, lack of passion when you take a career just to make the money. So to express the cons of higher education, I also want to express that investing in your education doesn't mean that you must go to college or you must earn a PhD to have valuable returns on your investment. And you can't obtain your education through a mentor, apprenticeships, or volunteering. The purpose is always to be learning and always to keep practicing your craft. The benefit is always to be improving and separating yourself from the masses. Thank you guys for watching, and always remember to keep it simple.